A lot of people think the regulators like the SEC or the CFTC, who regulate the futures exchanges, are there to help the retail public, but no, they're in bed with the big banks, the bullion banks, and we saw back in 1980 that if you try to take delivery of silver, they'll change the game and they'll stop that. As for the silver squeeze, that is the best way to really go after the paper game, because it's very hard to stop people, you or me or other people, from buying a little bit of physical silver every week or every month. And eventually it will make a difference.
One of the more common and frequently referenced topics in the precious metals space is the heavy and continuous manipulation of prices by central banks, large commercial banks, regulators, and so-called exchanges like the LBMA and Comex. A few years ago, the United States government levied a $1 billion fine against JP Morgan for spoofing the metals market. According to the Department of Justice, the banking giant had negotiated a resolution with the department to resolve criminal charges involving tens of thousands of episodes of unlawful trading in the markets for precious metals futures contracts. Precious metals analysts and commentators have been discussing the heavy and blatant manipulation and suppression of gold and silver prices before and after the fines were announced. It is a common belief in the metals industry that the silver market especially is systematically manipulated, largely by big banks putting in large naked shorts and lots of high-frequency trading activities just to suppress the metal's price. Many believe that this is why silver prices are still so low and the gold-to-silver ratio is so high. Despite the fines and conviction of 2 former precious metals traders at JP Morgan, the manipulation continues to this day, devastating investors who have high hopes for their stacks. Fortunately, many metals investors believe we are drawing closer to the end of these unethical and fraudulent activities by JP Morgan and others. According to Mario Innecco, a renowned financial markets and macro analyst, the change we have all been waiting for is rather close. During a recent interview with Commodity Culture, Mario shared some important details about gold and silver manipulation, specifically those involved, why they do it, and how they carry out these activities. As you might have suspected, this manipulation goes way deeper than we believed, and it involves practically everyone from our regulators to the Federal Reserve. During the discussion, Mario revealed that the manipulation of gold and silver is done specifically to keep up the charade of fake money while deliberately suppressing real money, gold and silver. Hence, people are wary of investing in them. But the winds of change are rapidly sweeping across the globe, and Mario is certain that we are much closer to the end than we can imagine. We will now present clips from the interview. Please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks and enjoy.
First of all, I just wanted to tell people that I noticed some interesting patterns in the price of gold and silver. And by that, I mean the same thing used to happen every day at the same time, which is very unusual. Markets are more random. And that was back in 2002 when I started buying gold. I bought some Krugerrands, but I worked in the futures market, not doing gold and silver, but trading government bond futures. But I started following gold and I noticed that. And I saw right away that it was manipulated. But I don't think, in my opinion, there's any speculation that it isn't. And you can go back almost 100 years. And there's something called in the UK, it's Her Majesty's or His Majesty's now exchange equalization accounts. And you can find that on the government website. And it says here, I'm reading, the EEA was established in 1932 to provide a fund which could be used for checking undue fluctuations in the exchange value of sterling. Subsequent legislation has extended the possible use of this fund. And it says here as well, under this government website, that the fund holds gold and other foreign exchange assets. So as I said earlier, when I started out in the business in the early 90s in Switzerland, I worked for a small private bank. And the first thing I noticed is that on the Reuters page called FX at the time, where the dealer for that small firm dealt in foreign exchange, I noticed a little thing at the bottom, XAU and XAG with prices. And I asked him, what is this? And he said, well, that's gold and silver. It's traded on the foreign exchange. So that was why 1932? Why did the UK create that equalization account? Well, because in 1931, the UK left the gold standard. And I'm sure they knew that the value of sterling would be attacked by speculators and investors and traders. So that's why they developed that exchange stabilization or equalization account, And then a year later, the U.S. Treasury created the Exchange Stabilization Fund. And that was also when the U.S. left the gold standard domestically. And it says here the U.S. Exchange Stabilization Fund was established at the U.S. Treasury Department by provision of the Gold Reserve Act of 1934. So even, the act from which it was created is called the Gold Reserve Act. It says it was intended as a response to Britain's exchange equalization account. The fund began operating in April 34 under Director Archie Lockheed and financed by $2 billion of the $2.8 billion gold surplus the government had realized by devaluing the dollar. Not only devaluing the dollar from $20.67 to $35, but also confiscating all that gold from the American public. So they were using this fund to basically control the value of the currency, just like the British. So that's where it started, in my opinion.
Undoubtedly, the suppression of gold and silver prices is one of the few things keeping everyone fooled about the strength of fiat currencies and the global monetary system. The banking cabal, think of the Rothschild family and other powerful and influential unethical billionaires, make trillions of dollars every year from the financial services industry. This industry backs the current monetary system, ensuring that central banks can continue to print and devalue our money just so these people remain stinkingly rich and powerful. The central banks, in turn, use the printed money to support the banks, large hedge funds, and other powerful ventures. It's a vicious cycle of fraud, power, and insatiable greed, supported by the masses' ignorance. However, alliances like the BRICS are stepping up to put an end to this manipulation, which is why several of the bloc's member states or interested parties have been buying so much gold and silver. When the time comes, revaluation will happen, and we will all be winners. Let's get back to Mario Innecco.
I think the Comex and the LBMA, they're not the same organization, but the banks and the financial institutions that operate in both of those, they use both of those. So they scratch each other's back. The futures market is simple. You only have to put about 5 to 10% down of the value of the contract. And it creates volatility because people are leveraged. And the same thing goes for the LBMA. There's a lot of forwards trading, which is also leverage. Forwards are just another name for a future, but on an over-the-counter market. Yeah, and that's how they do it. It's just like the foreign exchange market. There's a lot of leverage, and they sell gold and buy gold that doesn't exist. Hardly do they take delivery of gold and silver on these exchanges, especially Comex. LBMA, probably not as much either, but they do sometimes because a lot of the producers and the consumers, like jewelers and refiners, they do need the gold. The other thing I would point out too, that shows how they use especially the gold futures exchange on Comex to manipulate the market is a WikiLeaks document pertaining to correspondence between the U.S. Treasury Department and also like private bullion dealers in London. And you can find that on WikiLeaks. And there's a section here which I highlighted, which I'm reading. It says, and this is talking about the bullion dealers in London who were in contact with the Treasury because they're trying to ascertain that whether once the U.S. made gold legal again in 1975, whether the American public would load up on physical gold, and that would be a problem for them. But this is what the WikiLeaks document says, and I'm quoting here: to the dealers' expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So, I mean, that's very clear to me that the futures market was created to discourage the public from holding physical gold. And you said at the beginning of the interview, why hold gold if they manipulate it? Well, I think, first of all, you need to be very patient because eventually they have to let gold go because it's a way to reliquify their ever-growing fiat currency Ponzi. And second, yes, they're going to try to keep you out of gold by making it volatile. I mean, I've spoken to many acquaintances and people I meet over the years. They've asked me, should I buy gold? And I always say yes. But they say, well, but it's too volatile. It's a commodity. But that's the way they make it. And the mainstream media treats gold as well as a commodity, as volatile. You hardly ever listen to people talk about gold and silver as currencies traded on the foreign exchange market.
The East is rising and breaking away from the suppression and manipulation happening in the West. Russia and China have announced that they will run physical exchanges, not the manipulative paper market we have in the West. During the interview, Mario spoke about an impending black swan event that will force China and others to completely break off the control of the West and show their power, which will be measured by the amount of gold and silver they hold. He suggested it could be a natural disaster, a cyber pandemic, or anything else. Whatever event it will be, we believe it will finally reveal the mess we've made of the monetary system. It might even lead to the complete collapse these experts have been predicting for ages. Please share your thoughts on Mario Innecco's interview and the constant manipulation of precious metals. Do you agree that gold and silver prices are heavily manipulated? When and how do you think this manipulation ends? Let us know what you think in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.